All right, what's going on, driving dollars peeps? Chipotle down almost 12% today. What is going on with Chipotle? So, guys, today I want to talk about, is Chipotle an opportunity right now, and what's up with Chipotle stock? I was looking through the stock market this morning when I first woke up, hence why I still have some morning voice going. And I just noticed one of the big movers in the market, out of at least like the S&P 500, is Chipotle down 12%. Tesla's also down big, and you guys can look at that. I'm done looking at Tesla. Sick of looking at Tesla news. It's always on the news. But Chipotle stock down 12%. Now, I remember just a little while ago, Chipotle was getting beaten down because market sentiment was so shitty, because everyone was saying like, oh, Chipotle is like undercutting us with amounts, and they're just like under putting meat and stuff on all the bowls and all the burritos. And then the CEO came out with like a whole new thing to address that, where it's like, we're gonna overstuff the burrito and give you lots of value like we used to. And that made the price of Chipotle go up. And then now, 2 quarters later, we're down and down again. So let's see what's going on with Chipotle. So today, as of right now, it is July 24th. It's Thursday. The earnings for this just came out. They just reported. We're $46.60. $46.66, down almost 12%. Looks like we were in the low 50s just before that earnings. So I asked ChatGPT. You already know we're back on the ChatGPT, which is where I do most of my stock research. I said, why did the stock drop so much today? Well, it looks like same-store sales missed. So Chipotle declined 4% in comp sales in Q2 from last year. It looks like market expectations was 2.9%. So that looks like they dropped, what percent is that? 4% compared to 3%? So that's a 33% higher decline than what the analyst in the market was expecting. So that's pretty big, 33% difference. And it looks like the management, this is probably either on the report or on the earnings call, but it says, looks like they're forecasting sales to be about flat for the rest of the year. So essentially, Chipotle just said, well, based on how much money we're going to make and the store expansion and whatever opportunities else that we're doing, we are probably not going to grow this year. And the expectation was low single digit growth. Low single digit. That's like 1, 2, 5%, 6%. Low single, not even single digit, low single digit. So 5 or below percent. And that was the market expectation that priced Chipotle where it is right now, which is, we're in the low 50s. Before today, and the PE ratio was already rich. So right now, with the 12% drop, we're at 44%, or we're at 44 times on the PE ratio. So that means before earnings came out today, PE ratio was probably in the 50s, and that was already 50 PE ratio, pretty freaking high for a company that was expected to be a single-digit grower, right? A low single-digit grower. That was the expectation. So for them to say that it's going to be flat, meaning it's going to be 0%, 1% growth, heck, it might even be negative 2%, and now they're trading at a PE ratio of 44, that's still pretty high for a company that's not expected to grow and might actually have a risk of shrinking a little bit in the upcoming 2 to 4 quarters. So there's some things to look out there. You always got to look at that PE ratio. If there's something I can teach whoever's watching this is a new investor, look at the valuation of the company. Look at the valuation of the company, because what the valuation of the company mostly says, right, in a general sense, is how much growth investors are pricing into the stock. Meaning, if there's lots of future growth, the PE ratio will be high because investors are more willing to put more money into what the company will be, right? And usually, so the higher the PE ratio, the higher the growth rate should be. But if this company is saying our growth rate is probably going to be around 0, a 44 PE ratio is pretty high, because the market average is usually in the 20 to low 30s. In the restaurant space, it's 20s to 30s as well. And so, I don't know. PE ratio can also reflect market sentiment and hype. This is probably what's supporting Chipotle a little bit too, because Chipotle was quite the hype stock a few years ago, like 4 or 5 years ago. It was like a huge mega grower, and now it's a zero grower apparently, based on what the management of the company team thinks. And so it's not looking good for Chipotle on a PE and a growth standpoint. But let's go on. I wanted to see what the analysts thought of Chipotle. It looks like price on the 12-month average is $58. These analyst expectations probably came out before the earnings call and the earnings report today. I don't think they're going to be saying that $58 price target anymore, given that we're at 46 and they're expecting 0% year-over-year growth. I don't know about that. So analysts, you guys, this is gonna change in the next few days. Just watch. Mark my words. Give it 2 or 3 days for the analysts to put out their new expectation, and we're gonna probably be at like a $48, $47, $46 expectation, or even lower to what the price is today. Might even be a sell. But let's look at the growth drivers and opportunities. How is Chipotle gonna grow? Where's the hope, right? So we're looking at the hope list right now over the next 12 to 18 months. So new store openings, Chipotle plans to open 315 to 345 new stores in 2025. In the long term, they're aiming to double the store count from around, the mid 3,000 to 7,000. Wow. So sales and I forgot to mention this. Look at this real quick. The last bullet, consumer weakness. So because of macro volatility, low income customers are spending less money, and on average, customers are spending less money each time they go to Chipotle because they're opting for the chicken instead of the beef. So per customer spending is lower now in Chipotle. So let's go back to the growth drivers. So we're gonna open more stores. 7,000. Mostly it's gonna be in the US, and we'll talk about international expansion in just a little bit. But mostly in the US, we're gonna double the store count. And I looked up ahead in this as to where is it gonna be. It said it's gonna be mostly in the US, and they're mostly aiming for the small to medium cities that don't have a lot of Chipotles yet. And so they're kind of tapping the untapped markets, untapped areas and cities and towns in the US that don't have a lot of Chipotles. Because if you live in a major city, there's a Chipotle in every corner, and it's actually starting to be an issue with that because they start cannibalizing each other's revenue. Because if there's so many Chipotle in such a small area, they're tapping into each other's markets, and so there's some double dipping happening there. So that's pretty good. Now, if we're opening 300 stores for 2025 and our aim is 7,000, when are we gonna get to this aimed 7,000 number? If you do the math, around 300, and we need, let's just say, after 2025, we're gonna need 2,000 more stores. So that's 300, 300, 300, and then another 300, 300, 300. So that's probably gonna be 6 to 7, possibly 8 years if it doesn't go to plan. So this 7,000 long-term branch expansion really is long term. And so let's go next. Menu innovations. They came out with adobo ranch dip and the honey chicken. So I've seen this. I went to Chipotle. I go to Chipotle a little bit after the gym or after volleyball. And I've seen this adobo ranch dip. It's pretty good. It's like a Chipotle ranch. That's what it tastes like, Chipotle ranch. And then the honey chicken, it's good. It's like a sweet chicken. It's a little more expensive than the base chicken. It's 40 cents more expensive than the base chicken. Honestly, is it that much better than the base chicken? No, I like the base chicken better. The sweet thing going on. You already have sweet in the corn salsa, so I don't know if I want to add any more sweet in the meat itself. It's just extra sugar too. But in terms of the menu innovations with these two items that they added, remember when Popeyes had the chicken sandwich and everyone was going crazy and we're like, we gotta go to Popeyes and get the chicken sandwich and compare it to other chicken sandwiches and post it on social media and compare it to the other sandwiches, whatever. I gotta have it. Or when Burger King came out with the chicken fries and everyone was like, I gotta get the chicken fries, I gotta get the whatever. I don't see anybody feeling that way with honey chicken and adobo ranch and Chipotle. It's not a craze. It's not I gotta go to Chipotle and get their ranch. I gotta go to Chipotle and get their sweet chicken. Nobody cares. Which kind of sucks. I'm sure it's giving them a little bit of diversity, and some people who are Chipotle regulars like myself, and there's a lot of Chipotle regulars, right? Because people see it as a healthier, fast casual option that's better than fast food, but it's the same speed as fast food. So that's good. It gives those people a reason to come back. but I don't see it in making any substantial change to like revenue and new customer acquisition and all that stuff. Automation and cost control. So it looks like they're investing in systems like avocado. So I guess the fucking guacamole is just making itself now. So that's good. You know, you can reduce labor. That's one less person to hire to mash avocados and mix the spices and stuff. Another thing that it doesn't mention in the innovations, it's not a automation or a menu innovation, but they have something called Chipotle lanes. It's just their corporate jargon for they're putting not fast food. They're putting drive-throughs in the Chipotle branches, and it looks like for each branch that they put a Chipotle lane or a drive-through in, it's increasing the revenue by an average of 15%. So the store, all the Chipotle stores that get this drive-through on average make 15% more revenue than the non-drive-through branches. So that's a substantial thing that they should probably invest in, because 15% bump in revenue, and I mean a drive-through is only a one-time cost. You only have to build the drive-through once. You only have to get the cash register for it once. So once you get the infrastructure in there, that 15% is every year, right? So I think that's one thing that they should definitely keep investing in. And it looks like for the new branches of Chipotle that they are making, 80% of the new Chipotles all have Chipotle lanes or drive-through. And with this long-term expansion of the 315 to 345 new Chipotles for 2025 and then 7,000 long-term. So essentially, at this point, by the time we get to the 7,000, majority of the Chipotles will have drive-through and have that 15% bump in revenue and sales. So that's a really good story, but more on the long term. International expansion, we'll get to that in just one second. Digital ordering strength, though, it looks like with like their online ordering, which has been around forever, I guess now it's getting pretty good. I don't really care. I don't really see the digital ordering like making a massive difference, because it says that the digital ordering is increasing, but you know, at some point that's just kind of taking away from the in-store purchases, so it's not like you're acquiring a new customer with that. But anyway, international expansion. So I wanted to look more into this international expansion. So I actually asked ChatGPT, I'm like, what's going on with the international expansion? So let's scroll down there to international. So yes, Chipotle is actively planning international expansion. It's in the early stages. So majority of the stores is still in the US. Over 3,000, I think over 3,500 of the 3,800. Hi, honey. There's Lily's in the back. But yeah, out of the 3,800 stores that Chipotle has right now, I think 35, 36, maybe even 3,700 of that, like literally 90%, is in the US. And so Canada, steady expansion. They have 40 stores, 40 out of 3,800. Who cares? United Kingdom, literally, it's only in one city that they have Chipotle. So they probably have like, you can probably count it in two hands how many they have in London. France and Germany, they're just doing market studies, so no Chipotles there. Europe, described by Xavier as a long-term priority, other than in the UK, zero Chipotles there. Middle East, looks like we're going to expect a couple Chipotles in the Middle East. Of course, Dubai is going to get that first stuff, right? And 2026. So as of right now, the only places that have Chipotles outside the US is Canada with 40, the UK with probably single-digit numbers of Chipotles, and that's it. And so Europe is a huge market that Chipotle can take advantage of, and especially since they don't have to ship chicken or rice or avocados there. Really, it's just the spices and getting the staff there trained. But it's only in early interest in market studies. We're not investing anything in expanding to Europe. It's a long-term priority, so they don't care. They only want to. It seems like Chipotle wants to just expand in the US. And double their store count to that 7,000. Now, should they prioritize Europe expansion? Well, here's the thing. Chipotle doesn't do any non-corporate owned franchises, except for in the Middle East. So unless they're open to doing that with Europe, the Europe thing's not going to happen, because they're going to be spread really thin, just managing the US stuff with Chipotle. So we'll see what happens with Europe. I think they should take advantage of it and just do the franchises, because the franchise is the only way they're going to be able to spread their management power and kind of like let go a little bit of all of that control over the branches in sake of expansion, kind of like McDonald's and all the other fast food places. But that's up to Chipotle. They know, well, hopefully they know what they're doing in terms of their expansion, and essentially shooting themselves in the foot by not taking advantage of Europe. But we'll see what happens with the Europe expansion. As for now, it's a almost completely untapped market other than a few stores in London. So there's an opportunity there, but they are not currently taking advantage. We'll see how that reflects in the next few years. And so back to our opportunities and growth lists. With that 7,000 branches that they want to get into, I asked Chipotle, like, is there a market and demand that could support the 7,000 branches that Chipotle is aiming to? Because that's going to double their store count. And per here, it looks like there is a market that can support those 7,000 locations. Like I said, it looks like analysts see this over 10 to 15 years. If we do the math, if they keep doing like the 300 plus branches each year, it should be done in 6 to 7 years. Looks like they have under-penetrated US markets, which is exactly what we talked about. Those mid-sized cities and towns and suburban areas that don't have like a really dense population of Chipotle stores in it. So we're gonna, everywhere that is untapped for Chipotle, that's what Chipotle is kind of aiming to get into. And strong brand, fast casual, but honestly, there's so many new fast casual places that's coming out right now. Like you got Sweet Green, you got like kind of like mom and pop, like build your own Chipotle type places popping up everywhere. I'm sure if you guys go to your local mall, you'll see like a Chipotle dupe in there, or even like they'll change it. It'll be like Greek bowls instead of Mexican bowls. What else is there? So many other fast casual. Cheesecake Factory's conglomerate company, they have oh my gosh, they have their own fast casual. I can't think of it. They have Cheesecake Factory, they have I'll think of it. You guys know what I'm talking about. If you guys follow Cheesecake Factory, you know what fast casual they have going on. Cheesecake Factory, I gotta look it up. Fast casual restaurant concept. It's not a concept, I've been there before. Social Monk, no, that's not it. That's not it at all. Oh my goodness. Cheesecake Factory Company, restaurants, because they have the Italian, which is North Italy. Flower Child is their fast casual. It's so good. We have a couple of them in Vegas. One actually just opened near my parents' house in Vegas. Flower Child is so good. Think of it like all healthy stuff. And it's just like really fresh ingredients. Like you can choose between like quinoa and sweet potato and like cut up steak, rosemary chicken breast. Super good. I own a lot of Cheesecake Factory stock, so please go to Flower Child. Anyway, more of the things that can help the 7,000 branches that they're trying to open. Chipotlanes, already talked about Chipotlanes. That's the drive-through. 15% higher sales in the stores that have it. Love it. 80% of new stores are going to have Chipotlanes. Love it. And that's 80%. That's going to get even more multiplied because we're opening so many branches. So I like it. Unit economics, essentially, this is just them talking about how that with all the profit margins in each store and like the data that they've collected from the market, it looks like there is the economics to be able to support more spending in more Chipotle stores. So, all right, if they say so, if they say that they can support 7,000 more branches or 3,500 more branches essentially in the US, then that's good. That's good. So some challenges and risks, market saturation, which is exactly what I'm worried about. Like, I guess maybe I'm biased that I live in mostly like bigger cities with higher populations that I see Chipotles everywhere. So to me, it seems like the market's saturated, but if they're gonna focus on doing smaller suburban towns that don't already have Chipotles, then it shouldn't be an issue when it comes to market saturation. As long as they don't keep putting them in Los Angeles, San Francisco, New York that have Chipotles in essentially every block, shouldn't be an issue. Which is the cannibalization risk. I talked about this earlier, which if you put too many Chipotles together, they're just gonna start eating into each other. Consumer softening, essentially people just start not caring about Chipotle, not going to Chipotle, or spending less money each time they go to Chipotle, which is the problem they're having this quarter, right? Everyone's spending like a few dollars less per customer every time they go to Chipotle because they're opting for chicken over beef because times are tough. So anyway, that's enough of the qualitative stuff. Let's go into the numbers of Chipotle where it really matters. So I put, give me a table of the last 8 quarters of the earnings data, top line, bottom line, beats, misses, and then the growth rate for each quarter. Because I love looking at growth rate and comparing it to the PE ratio, right? I want to make sure that this company is, if you're gonna invest in a company, that the valuation is a little bit lower or at least appropriate to the expected growth of the company. So let's take a look at this last 8 quarters. So it looks like quarter 3, actually all of 2024. Oh, actually all the way from quarter 3 23 to quarter 4 24, we're looking at double-digit year-over-year growth. I like that. And then you look here, quarter 1 2025 to quarter 2 2025. 3% year-over-year growth, low single digit for the last 2 quarters, including the earnings report today. That's not looking too good, right? Let's look at EPS. It looks like they're beating EPS, and looks like they missed on revenue the last few times. Hence, probably why this year-over-year growth is tanking so hard. And so the last 2 quarters have been low single digit growth. That was the expectation for the current earnings report that just came out this morning. And now management has come out and said, yeah, it's going to get worse. It's essentially going to be flat, so that 3% is even aiming high for the rest of 2025. Not a good story. I looked at, I don't want to go into it too much on this presentation right now, but I looked at comps for the other companies that are out there, and for other fast casual restaurants, not fast food, but fast casual. And it looks like the main competitors, things like Sweet Greens, which is not profitable yet, so I didn't want to compare that. Wingstop is the biggest one. Wingstop's been posting essentially like teens to 20s double-digit growth quarter after quarter after quarter, which is really good. But their valuation is crazy. The PE ratio is in the low 100s. It's like 102 or 103x multiplier. So that's pretty freaking rich. I don't know how Wingstop is doing that. I mean, I have a lot of coworkers and friends that are like all going to Wingstop. It looks like it's like the number 1 option right now for fast casual wings, in terms of like if you want to just get some wings real quick, everyone goes to Wingstop. So good for Wingstop, but that valuation, that's like Palantir valuation. I don't want to touch that, man. So not that I'm talking shit on Wingstop. I didn't do any deep dive into Wingstop, but just looking at that 100% or that 100x valuation for the PE, that looks crazy. And so I think we've looked at enough stuff in terms of Chipotle. What do I think with this company? Is there, essentially for me as an investor, I'm not just looking for, is this company gonna go up? I'm looking for, is there a 2x opportunity with Chipotle? And yes, I think there is a 2x opportunity with Chipotle, with them trying to grow to the 7,000 locations that they're aiming for. Plus the Chipotlanes looks really good. I really like that. How now they're going to be really able to take advantage of that 15% branch revenue bump every time they put a drive-through in, and then they're expanding. So essentially they're just putting a multiplier on that 15% revenue increase per branch, which I love that. And then 80% of the new branches are going to have the drive-through. So they're really utilizing that one niche thing that they can invest in, that they know they're going to get their money back. And so do I think there's a 2x opportunity? Yes, but it ain't going to happen for a few years. So right now we already have the management saying year-over-year growth is essentially 0%. It's going to be flat, if not low single digit, possibly even negative for the company. On top of that, the PE ratio for the company is already 44. So it's already high, it's already rich, which honestly, I wouldn't be surprised if Chipotle keeps dipping down, because that PE ratio of 44, like that should be like a 10%. Like for a company to have that in this sector, in this fast casual sector with some growth opportunity, like a 44 PE ratio should be like a 12, 15% annual growth rate year over year. And so with them having a 0% growth rate, that 44 is high. So I wouldn't be surprised if this goes down even more. If we want a 2x opportunity, so Chipotle would have to be $90. The PE ratio would be like 88, and I just don't see that happening with Chipotle. So for me, it's a no touch right now. If I don't see a 2x in the next 12 to 24 months, it's not going to have a place in my portfolio. Now, for all of you guys who are long-term in Chipotle, which there is a lot of long-term growth levers here, I say go for it. I think it's really good. It's I don't know if it's going to be a stable stock or share for your portfolio, but it definitely has a lot of long-term potential. But anyway, thank you guys for watching this video. Let me know what you think about Chipotle stock. Remember, if you guys want to see the beginner stock videos, I'll have two of them: how to research a stock, which you kind of just saw me do here, and beginner stock strategy. I'll link that in the description below. But anyway, as always, guys, do your due diligence, which we just did together, both quantitative and qualitative. Educate yourself, empower yourself to do better, and as always, let's make this money.